All right, Quasar Marcus Live. You love Brandon from Overseas DeFi. How are you, Brandon? How was your 4th of July and everything?
It was great, and I'm doing very well. How about yourself, Steven?
Yeah, man. I tell you, the markets are starting to play nice again. The Bitcoin's back up, and
Very
crypto's
nice.
playing well. And I love the Overseas DeFi you guys got going on because you guys are Mr. and Mrs. Strategy over there. You guys know all about the strategies of Overseas
Mr. and
DeFi.
Mr.
I like it, Mister. Oh, you got a lot. I love it. I love it. And you know what's interesting? I was just talking about how the government's Japan is also now getting involved in crypto too, as well with the Bitcoin ETFs.
Oh,
I
yeah.
love that too. So things are moving in the whole world, and I love one of the things about it is you guys have strategies. It's not just about buying and selling and perps and things of that nature. It's also about having how to make money. On the sideline too, when you're not even playing the game. So I'm gonna get out your hair, Brandon, and bring your screens up.
Yeah, the entire world is starting to. There's a massive wave, a massive transition of the entire financial system is changing. Right, we're going from centralized traditional systems into everything is on decentralized blockchain rails. There are private blockchain rails that institutions and companies can use, but for the most part, the entire global financial system will become a public blockchain system. Everything will be on blockchain rails. So that actually informs the core thesis of our strategy here at Overseas DeFi, which is we want to invest in these assets, these crypto assets, layer one blockchains. Primarily, we want to invest in these assets and hold on to them for dear life. The mantra in crypto is HODL, HODL, hold on for dear life. So that's how we feel we're going to make generational advancements and returns on our investments, and generational wealth will be derived from holding on to those assets for a long time. In the meantime, we're all human. We live in the real world. We have bills to pay. So what we focus on here at Overseas DeFi is transforming. It's right there. Transform your idle crypto into daily cash flow. So we have something which is kind of a technical phrase, might seem a little bit strange to someone who's not in this world. We have what we call the DeFi carry trade, but I'm going to break it down. And I talked about this last night on the live stream. I do a live stream on the channel here every Tuesday night. I tried to do it at 6 p.m. Eastern, ran a little bit late last night, but I tried to hammer on this once again. The DeFi carry trade, it's very simple. We're borrowing capital at a very low interest rate. So simply borrow low, and then we deploy that borrowed capital into some sort of a yield opportunity where we earn a very high yield on that same capital. So borrow low and earn high. So it's not very complex. The trick is you have to have self-custody of your assets. So everything we do revolves around the idea of self-custody. Now, we're a small breed here in crypto. Most people don't even own crypto. Those that do, maybe they purchased some Solana, some Ethereum, some Bitcoin. Most people leave those coins on the centralized exchange. So they leave their coins in their Coinbase account, their Binance, their Kraken account. And crypto was invented, literally invented for self-custody. So they're really not taking a very important next step, which is those coins belong to Coinbase. They belong to Binance. They belong to Kraken, because crypto assets, those coins, by definition, they exist on the blockchain. And the only question is, whose blockchain account are those coins in? If you leave your coins inside your Coinbase account, Coinbase will say these are your coins, but in reality, on the blockchain, those coins are in a Coinbase owned account. So the first thing that we do is we take custody of our own assets. Excuse me. Now, once we have custody of these assets, and I went through this last night, I've been over this many times on the channel. There's recorded videos here. There are live streams here that you can go through. But to break it down very simply, once we have custody of our assets, we're going to collateralize those. That's another fancy term. We're going to supply those coins into a decentralized lending protocol. So this protocol, the one that we like to focus on and use, the biggest, most trusted, most battle-tested lending protocol in all of DeFi. This is a protocol called Aave. We're going to supply our coins as collateral on this protocol. Now, that does include a smart contract risk, but like I said, this is the original lending and borrowing protocol. It's been audited hundreds of times, and it's never been exploited or hacked. So I trust this protocol very, very much. Once we supply those coins as collateral, we're going to earn a small yield. So I'm earning about 1.49 on my ETH, and a tiny microscopic yield I'm earning on my Coinbase wrapped Bitcoin. This is a tokenized version of Bitcoin because there is no such thing as DeFi or smart contracts on the Bitcoin blockchain. So you have to tokenize your assets. This is one of the original tokenized assets right here. It's been around a long time, Coinbase wrapped Bitcoin. And those coins are staked here or supplied as collateral. The yield that I'm earning here is very much not the point. The point is once I have collateral, once I've collateralized my favorite long-term crypto assets, I'm now able to borrow capital very cheaply. Now, look at these interest rates that I'm paying. This is the paying side. So I'm borrowing these coins from Aave and I'm paying an interest rate. Now, when I borrowed ETH, the interest rate currently is less than 2%. That's per year. This is an annual percentage yield that we're paying to Aave. The debt value will slowly rise over time. So the interest that you're paying accrues to the debt. There's no payment plan here. And by the way, to do this, to borrow these coins, I didn't have to fill out any forms. I didn't have to go to a business, a brick and mortar business, and then I didn't have to get my credit checked. I just supplied the collateral, and then I instantly borrowed these assets. They came out to my wallet, my self-custody wallet, immediately. As soon as I clicked the button and signed the transaction, those coins were mine, and I'm starting to pay this low interest rate. So that's the borrow low part. Now, in terms of earning high, I'm going to switch over to a different wallet and a different blockchain. And this is a position that I started yesterday morning. And it's on the new Robinhood chain. So Robinhood chain is a brand new blockchain. It's only been out for less than 10 days, I believe. And it's an Ethereum ecosystem chain. So it runs on the same technology as Ethereum, but this is what we call a layer 2 blockchain. It's not important. What's important is this new blockchain is attracting a lot of new activity. So new wallets, many transactions per day, and tons of capital getting bridged into this blockchain. And of course, the Robinhood chain is associated with the everything trading app, right? Robinhood, the brokerage. And so what you're going to see over the next, I believe, over the next months and years is you're going to see a flood of traditional traders and investors who are trading stocks and options on Robinhood, and they're going to come into DeFi, especially once they realize, if they watch this video and realize how much better it is in DeFi, how much easier we have it, low stress, way less time commitment than sitting and trading stocks and options and watching your chart every weekday, the whole day long. I used to do that. I don't do that anymore. It's no fun. It's no way to live, watching those charts all through the day. That's not what I want to do with my time and energy. So DeFi is way easier. And by the way, it's so much more consistent. It's very difficult as a human to be consistently profitable in trading. 90 to 95% of people never make it. They never become consistently profitable, and they actually lose money. In DeFi, it's completely different. As soon as I start one of these liquidity positions, which is going to be our cash flow, our daily cash flow engine is a liquidity position. Excuse me. As soon as I start that position, the moment that gets opened, I'm starting to earn cash. And I'm earning fees based on other people trading. So let other people do the trading. Let other people mess around with the meme coins. I'm not interested in meme coins. I might, invest $100 or $200 in some meme coin just to punt it off and see what might happen. But for the most part, most of my capital, I'm invested in real DeFi cash flow on blue chip assets. Okay, so all of this volume and trading activity and new wallets and new TVL that's flooding into Robinhood chain is why I started this position yesterday. Everybody who participates in this ecosystem, in any part of the Ethereum ecosystem, they need Ether. Okay, Ether is the native coin for the Ethereum ecosystem. So whether it's Arbitrum or Base or Ethereum mainnet or the new Robinhood chain, you need, excuse me, you need that Ether to participate in the ecosystem. It's literally the coin that you use to pay your gas fees. So every transaction that you do on these different blockchains, you're paying a small fee, usually less than a cent, but a lot of volume makes up for it. And these blockchains and these transaction fees cause everybody to need to have Ether to participate. So I want to provide liquidity for that Ether, the ETH, that's the blue chip asset. That's where the trading volume is happening. And I could provide liquidity for some hot new meme coin, but chances are I'm going to get left holding the bag. The price is going to drop 99%, and I'll have a big bag of worthless meme coins. Rather than doing that, and rather than trading in any form, certainly not day trading or anything of the like, I'm going to provide liquidity for that blue chip asset. So let me show you what I did. And this position has been open since yesterday. Now the APR has come down quite a bit. Yesterday on stream, it was floating above 600%. This was expected. And I did say that, you know, take this APR, excuse me, take this APR with a grain of salt, because more TVL comes in, more liquidity providers enter this liquidity pool. And now I'm sharing those trading fees with other providers. But anyway, at the moment, and this is going to jump around as we see this, the yield on this position, I put about 9 grand in here, a little bit more than 9,300. And the fees that's about 1% a day. Now, the position itself it's a concentrated liquidity position. So when I set up a concentrated liquidity position, I have to designate a range. You can see that range that I designated there yesterday morning when I set up the position. Now, as long as the price remains in my range, where's the yield coming from? This is very important. So we're not talking about airdrops. We're not talking about some kind of token reward that's constantly being minted into existence just to pay a yield. These are actual trading fees. Whenever somebody trades back and forth between ETH and USDG, this is the, excuse me, this is the stable coin on the Robinhood chain. It's created by a company called Paxos. Very good stable coin. It's going to give Circle and Tether a run for its money here, because Paxos is a regulated U.S. company in the state of New York. It's tough to get more regulated than a company in the state of New York. So anytime somebody trades between ETH and USDG, I receive a fee from that trade, right? So traders trade, and I get paid the fees. It's kind of like being Coinbase. And I think I might have incorrectly stated the position when I started. It must have been less than 9,000 that I put into it. If I look in my wallet, because it would seem like if I put 9,000 in there, yeah, I still have. I bridged over $9,400 yesterday, and you can see the wallet now is up to a little over 9,500. So I've already had some profits, and yeah, I still have $800 there. So I didn't put, I don't remember exactly what I put into this position, but the point is that yield that I'm being paid, it's not coming from just pie in the sky, inconsistent type of a source. It's coming from real trading fees that are happening every day. So the yield will probably come down. Like I said, yesterday it was around 600%. I don't expect this 300% yield to be sustainable, because like I said, more people will come into the pool and provide liquidity into this pool, and I have to share the fees with more liquidity providers. But even if it comes down to 100%, which my experience on these positions, it's going to land somewhere between 80 and maybe as high as 120%. Either way, even if it's only 60%, how much better is 60% compared to what I'm paying on that capital? So that's the key that I want to get across. That's my main message for this. And I've hammered on this again and again. I'm a bit of a broken record with this. Borrow low, earn high. You get to hang on to your assets. Those coins that I supplied as collateral, the ETH, the Coinbase wrapped Bitcoin, I didn't sell those. So I did not trigger a taxable event. Now, I'm not a tax professional, so don't take any of this as tax advice. But if I didn't sell my coins, there's no capital gain or loss calculation to be made. I didn't dispose of the assets. They're still mine. I've just deposited them as collateral on Aave. So I didn't trigger a tax event. And number two, and this is important, I haven't exited the trade. So I believe the price of these assets will increase greatly in the future. Might take a few months, might take a few years. I don't care. I'm in this for the long haul, and those assets will appreciate in value, I believe, and I'll receive all of that price appreciation because I didn't sell my assets.
And talk to me a little bit, Brent, about the timing on this. How long does it take to, if we go with you guys, we put some money in with you, what are the time frames on this?
Yeah,
because it seems that everybody just wants to stick their money in, take it out every 5 seconds. You like the hodl idea? Me too. I love that.
Yeah, we're kind of the opposite of the typical crypto moon boy culture. We're not paying attention to the latest Cash Cat meme coin. There's apparently a meme coin that's doing quite well on the new Robinhood chain. It's called Cash Cat. I think that was the original app name for it. Yeah, we don't care about that. You see, I'm providing you can't argue with Ethereum being a blue chip asset in the whole crypto asset world. But to your question, Stephen, we have a couple of different programs within Overseas DeFi. Now, first of all, I have tons of educational content right there on the YouTube channel. So you could spend hours on my channel watching my live streams, watching my instructional videos. We have a playlist. It's 4 videos. Each video is maybe around 10 minutes plus or minus. So you could spend 40 minutes and learn how to build your own crypto. And
I love the education side of you guys. I think that's important, right? I think it's the biggest problem that we always have. There's always another broker. There's always another whatever. But people don't really understand what the narratives are. They don't understand the whole back end of things. And I've seen some AI stuff. I've seen and it makes me laugh because I'm like, people are just getting screwed. They're getting. This is how to actually make money.
Another big one, Stephen, and I've experienced this myself, is people spend a ton of money learning how to trade. And not only do they not learn how to trade in terms of being consistently profitable, they're paying money to be in the program. So they're paying for the education, and they're wiping out their trading account over and over and over again. So it's a really crappy place to be. I've been there. I've done it when I was first learning how to trade. I don't want to get into that. But with our program, so you can watch the YouTube channel and absorb that. I do that live stream every Tuesday night. And so the idea there is, usually it's just me talking. I always have stuff to talk about. I love to talk about this stuff. But the idea there is that you can tune into that live stream every Tuesday, 6 p.m. Eastern. Ask me a question. You can't share your screen, but you can ask me any question you want about the DeFi portfolio that you're putting together and what you're trying to do with your position and what's your range and blah, blah, blah. I'm there for it. I love to answer the questions in real time. So you could not spend a dime if you wanted to learn how to do this. And if you have some natural aptitude to do this, it isn't trivial what we're doing. It's not just, point and click and you're done, but it's not rocket science either. So there's a learning curve there. Now, the next level that we offer is a what we call Overseas DeFi community. And you can join the community. It's $97 a month. There's no plan. You can cancel anytime. There, you're going to have some more hands-on instruction. Okay, you're going to have a 14 or 17 module video course to go through. You get our portfolio tracker app, which has a built-in, very smart DeFi and crypto AI built into it. So if those 3 o'clock in the morning questions that you have as you're trying to work your way through it, I'm not available, ask the AI. You're going to get a straight up very knowledgeable answer, because
Love
that
it.
AI is trained on everything that we've ever done in overseas DeFi
Love
over more than a year. And then if you want to go, if you have significant capital, if you already have 25, 30, 40, $50,000 in crypto assets, and you want to accelerate that learning curve, and you need some more hands-on guidance, like not one-on-one coaching. We have group coaching. We have a weekly workshop. We have a weekly open office hours course. So we have what we call our accelerator program. So Overseas DeFi, it's a 90-day accelerator. We're going to take you, I said this last week, I'll say it again. We're going to take you from, you barely even know how to spell crypto, and within 90 days, you are a full-fledged DeFi operator earning daily cash flow off of your crypto assets.
Wow, it took me years in the market to learn. I love this. It's good. 90 days. All right. Yeah. Okay. Guys, if you don't know it right now, click on the overseasdefi.com. You can obviously the YouTube account too as well. You can see the YouTube. But I love this. And we'll see you right back here next week, Brandon. Hopefully you'll be ready to go again and tell us how much money you made, man.
Yeah, we'll keep in tune with the position there on Robinhood chain. I'm pretty excited about it, and the price action is starting to look pretty healthy now. So I called the bottom is in back on June 11th.
You did.
You can watch my live stream. I said the bottom is in.
And you did it here too. Close. I love it. If you're paying attention, folks, I love the numbers watching us. And he did it right here on the show too. He said Bitcoin looking bottomed out here. And yeah. All right, so Brandon, we'll see you right back here next week, man.
All right, thanks, Steven. Appreciate it.